Reversals. If you're looking to trade a reversal, you're going to be looking to trade against the underlying trend. So what I mean by this, if we are seeing a bullish market in an upwards trend, you're going to be capturing or trying to capture and pinpoint that reversal for the market to reverse to the downside, where you'll be looking for that sell trade. Now, if you're looking for a buy trade, you're going to be looking for the market to be making that downwards trend, looking for the reversal to capture that buy trade. Now, of course, it's not as simple as that. And if you've tried to trade those reversals in the market, just as I do, you're never going to pinpoint with 100% accuracy taking a trade with reversal. But in this video, we're going to look at the US dollar CAD and exactly how you can apply this strategy to fine tune your entry, to find those pinpoint areas where the market reverses. In fact, we'll be looking at this area on the chart on the US dollar CAD and to recognize how you could have caught a trade here with the market going to the upside. So this strategy is going to allow you to fine tune your entry and to find those reversals in the market. Now, if you keep watching to the end, I'm also going to share with you how you can use the trend indicator, which comes with the Forex Masterclass, and to actually allow this to pinpoint that entry with more accuracy, understanding the use of the indicator and divergence in the market. So the first thing what we always look at with a strategy is I look at using multiple time frames. So for this, I'm going to quickly go through a scale to show you the time frames that I would use. If we are going to use two time frames when we're potentially looking for a trade, so the lower time frame and we'll be looking at the higher time frame. Just excuse my writing. So what we're going to look at, if you're looking to trade off, let's say, the daily time frame, you're looking for your entry on a daily time frame, you'll be looking at your higher time frame on a monthly chart. Now, if you're looking at, let's say, a 4-hour time frame, you'll be looking at then the weekly chart. That's your higher time frame. Now, if your entry time frame, again, lower time frame, let's say this time is the 1 hour, you'll be looking at a daily time frame. And finally, if we're looking at, let's say, a 15-minute entry, you're going to be looking at the 4-hour time frame. So take a screenshot of this now or write it down so you've got this information, exactly how I look at using those two different time frames, the lower and the higher time frame together when taking a trade using this strategy. Let's remove that. Now, what we're also going to be using is the supply and demand trading strategy as well into this reversal strategy. If you understand supply and demand already, then this will be much more simpler for you. If you don't, when you watch this video, there's plenty of videos inside this channel for you to go through and start learning about supply and demand in your trading to help you pinpoint these types of trades. But what we're going to start looking at first is that optimal area where you want to find an entry. Where is the area you want to look to pinpoint? So if we looked at price at the moment and we see the price is pulling back, let's zoom in and let's take the price to this side so we don't see current price. If we've seen price starting to pull down, as you can see here on this daily time frame, what are we going to be looking for on a lower time frame entry? I'll be going down to a 1 hour time frame. So if this is my setup chart, the daily, my entry is going to be the 1 hour time frame. And we'll go through how you look to take that trade with a confirmation entry. And in fact, that's also a change of character. And if you haven't seen that video, then keep watching to the end, as it's coming up after this video for you to watch and understand what change of character is. But if price is sitting here right now, you're looking down to the left to look for your nearest area of structure, or in this case we're looking for an area of demand, or if you trade with order blocks, you'll be looking for your order block where you're looking for an entry. So looking at the current price on the chart, we mark out where we can see the last area down to the left. We can identify this is our last area of demand. So this is a demand zone. Now this is actually what we call a tested zone. To learn more about exactly what a fresh and tested zone is, that I do go through inside the Forex Masterclass in much more detail. But there is a video, which I will leave it linked above now, so you can watch that at some point as well, which goes through the fresh and tested zones of supply and demand. So this is a tested area of demand. So when I'm looking for an entry here, I'm going to want to see price. Let me just mark it out want to see price going below this level here. So now we have our area of tested demand in play. So we're looking for price to now drop into this area where we're going to then use the lower time frame of the 1 hour on this occasion, because we're on a daily setup chart, to look for our entry. Now this doesn't have to be a long-term trade. You can just look for a short-term trade. Now if I was looking for a short-term trade, I'll be marking it out. We've got this area here where the market is now dropped through, broken. You can see we came back and slightly tested it as we dropped away. And we can also mark off this previous era structure here in the market, where we can see price has reacted on a couple of occasions. We broke through, we retested it with that pin bar, and we've dropped away. So we have a couple decent targets there to look for. So if I'm looking for a buy trade, they are going to be the targets we're going to be using on this strategy. So we wait for price to come into this area of demand. So we go forward on the chart. And once we see price entering, now you can see price has entered into this area of demand. And we see price going lower, removing the low of this area, which is our tested area of demand, and we drop in. Now at this point on the chart, we're waiting for that entry, and we're going down to the lower time frame to look for a trade. So we're going to mark this off. Now we've got our setup chart. This is a daily. We've fallen into an area. We know where our targets are going to be placed. We're looking at these areas on the chart for our potential target. So now we'll go down to that lower time frame, which is our entry setup time frame, where you can look for that change of character or the trend reversal or the confirmation entry, whatever you want to call it. And then we'll look for that entry to capture a decent trade with a great risk to reward up to these areas on our targets. So let's now go down to a 1 hour time frame and we'll find this area on the chart. As you can see, we've now come down and this is our area of demand. So this is our daily tested zone. We can see this was the area where price needed to drop below. It has dropped below right here. So now we're looking for that change of character, that reversal confirmation entry. And this is simply done by looking at price. And then we just remove this line now. We want to see where price drops in. This is our last area of market structure. So now we need to see the break of structure as it happens right here. And then we can see price pulls back and we continue to go higher. Now we have these potential targets based on a daily time frame. Now you can also look for your targets based on your lower time frame entry. So we could look for a target at, let's say, as we see price dropping down, you could use this as a first target if you wish, and then look at this as your second target. You have a choice here to go for a smaller time frame target, which you're most likely going to hit on entry, and then look for your next target on your setup time frame being the daily. So how do we look for this entry? Well, what we're going to look for now is, with that change of character, we're going to look for an area of demand to be created on the 1 hour time frame now to capture this entry. So let's now go closer into this area of price, and I'll show you exactly how you will use this to find your entry and fine tune that reversal in the market. So again, quickly coming to this area now on the chart, where we see price breaking through to the downside and then we rally up, we can identify where price now breaks this high in the market. So we have a break of structure. This is our first break of structure as price made the swinging pattern to the downside as it went lower, breaking these structure lows. Then price has broken back to the upside, leaving behind a valid area of demand. So we can draw this as our area of demand. Now price on the first pullback does not come into this area of demand, but it's still a valid zone to look to trade from. Now price does break structure again, and then we have a second area of demand. Now this is where you can use this demand zone to take your first entry and leave this area open in case price was to go deeper. Now this, you can see price, you capture entry. Now this will be using, like I said, get entry strategy, and there is a video inside this channel and much more on that inside the Forex Masterclass. Now you could look for your profit target just at these previous highs on that 1 hour time frame. And if we just quickly go back, zoom back out on this chart, we also said there was a potential to look for these highs here for your first target. Now you can see using this area of demand came in at the same area, so you could just go off this high as your first target and that would have been achieved. Now you're risk-free on that trade and you can let it run to that next potential target on the daily time frame. That's how you can actually bank those profits and start increasing your account. So there is your first entry. Remember now, we have this zone here in the chart we can leave, and we have this zone of demand where we can take our first entry. So that is our first entry. Now let's say price doesn't continue up to that daily second target and it actually comes back and you get stopped at break even. This area of demand is still open, and if we just take this into the future, let me just change that to, let's put this to 12. That should do it. And if we go forward in the chart, you can see price does go higher, but then we have that final drop down which breaks through all these lows of structure, removing stops, because this is where people have basically bought in the market as a reversal trade, and we drop down into this first area of untested demand. That's why it's crucial you understand the strategy. This is the first area where we see that change in character, that trend reversal, and our confirmation entry. This is our second area, and this is where you'll capture your entry. It's a fresh area, and this will be your entry. We'll stop at the low of this zone. So now you understand how you can confirm and pinpoint that reversal with the use of those multiple time frames. So if we now move over to this area here, let's actually zoom out. Let's go out, right out. We can see from that point where the market comes back in, you've got the potential to target this area, and this area is your two targets, or you can look for this as your first profit target. And what's that going to give you on a risk to reward? For an example with this trade, we'll be looking at a risk to reward. If you're taking this first target here, you've got a 9-to-1, or you've got a 13-to-1 at this daily area, and another 20-to-1 at this daily zone. So you can see how these types of trades can turn out to be a very high risk to reward trade. So that is the strategy, how you can look to actually apply multiple time frames and a supply and demand trading strategy, understanding the change of character. Now the next thing I want to quickly share with you was that trend indicator, and how applying this to the chart will allow you to actually identify with more accuracy and to pinpoint that entry with the use of the trend indicators. Let me just place that onto the chart and I'll be right back. So we have the trend indicator on the chart. First, I'm going to go through the actual entry down here, how you to understand using divergence in the market with the use of this indicator. Let's just go in closer to price. So at this point in the market, where we're seeing the reversal happening, as price comes in and we break this structure. So what do we have on price? Well, we take this low of the market, this is the main low where price pulls back and breaks structure. To this low, we have price going lower. But on the indicator, we have it going higher, showing us divergence in the market. Now, we can also use this indicator with multiple time frame analysis. So if we now actually go up to a 4-hour time frame, let's just leave that line there, go to the 4-hour. At the same point on the 4-hour, we see this push down. We'll mark out again our area. We can see price is going lower, but our indicator is going higher, showing you again that divergence against price. And this is going to give you that extra added aid, being confident that the market is likely to reverse at that area. Now, to help you even further pinpoint this, going to the daily time frame, which is actually the setup chart in this trade setup, let's go to the daily. You'll be able to identify that the indicator is coming from this oversold area, and at the same time heading up when we're seeing that divergence and that change of character out of this area of tested demand. And that is how you can use all of this together to give you that strategy and give you that confidence when looking for those trend reversal trades. Now, of course, if you want to get access to the Forex Masterclass Trend Indicator, it is linked below in the description of this video to check out the course and exactly what you will get in the course, with also access to the private community. So this is exactly how you can use this strategy. You don't need to use the trend indicator, but I'm just showing you how that can actually improve your accuracy with a reversal in the market. But with a supply and demand strategy, it's going to allow you to identify these reversals. Now, of course, you could be using an order block, which to me, an order block, supply and demand, similar thing. But understanding that this is an area where price could reverse as we came into it, and also we can apply Fibonacci and everything else into this as well, you can then pinpoint those reversals. But remember, we're using multiple time frames, the understanding of supply and demand, and that change of character when you're looking for the entry. Now, on this occasion, this pair just went all the way up to the previous highs, but you're never going to know that this is going to happen. But the strategy itself will help you to improve accuracy when looking for an entry with a reversal at the trend. So I hope you've enjoyed this video today. If you have, give me that thumbs up. And popping up right now is that change of character video I mentioned earlier on the video to share with you exactly what that is and how you can use that in this sort of strategy, understanding the change of character where the trend reverses.